Hey everybody, it's Retire on Premiums for video number 4, the conclusion to the first month of the experiment of the CONY ETF versus using the wheel strategy on the stock coin or Coinbase. It's February 6th. It is after market close. It is the last day before CONY ex-div date, which is tomorrow. So just to recap, we started this experiment on the 5th of January, which was the CONY ex-dividend date, and we ran it up through the day before CONY ex-dividend date. Actually ended up being slightly more than 31 days. Again, this is not financial advice. This is just me documenting an experiment I did with the goal of, over hopefully a relatively long period of time, I can demonstrate a track record of beating the CONY ETF using the wheel strategy. So very quickly, the yields were announced today. So I've got this one down here highlighted in green. The distribution for CONY this month was $1.751. So 1.0751. Right here, this is the distribution rate at the current cost basis. And as we're going to get to in a second, CONY is actually down, a fair amount over the last 30 days. And this is just the 30-day yield. This is the annualized, sorry, at the current share price, and this is the 30-day yield. So let's get into the let's get into kind of what's happened. So my last video a couple of days ago, or yesterday maybe, I talked about closing out this trade. I did on Monday. So I closed out this call that I had sold the week before, bought it back for, a relatively small percentage of what I had sold it for. Today, I didn't do anything. So the 6th, I did not do anything. So let's just kind of look at the results. On the 5th of January, when we started the experiment, this is the closing prices. Now you could argue, should I've used the high, the low, the average? I used closing prices. CONY was 23.46. Again, this was ex-div date. And coin was 153.98. Today, CONY closed at 19.45 and coin closed at 119.79. So CONY price down 17%, Coinbase price down 22%. Kind of makes sense, right? Because they had the weekly calls in there that they were selling. And oh, by the way, the price of CONY tomorrow is going to go down by the distribution. Now, it may also go down because of how coin and the synthetic do, or it may go up, but it's going to go down by at least the distribution. So let's look at what happened here. So month to date, so my coin position, I have an unrealized loss of $1,521, and that's based on when I took assignment of the 100 shares up here on the 12th. I sold a call on the 9th. I took assignment on the 12th at 135. Stock price is now 119. So I'm about $15 a share, a little bit over $15 a share on cost basis. I collected, though, $1,020.09 in premiums. So actually collected 1132, but I paid to close 112. So come up with this. Interest of 26.24. I don't want to get into depth on the interest calculation, but CONY does earn interest because they hold cash in treasuries. And as I described in previous videos, I use a brokerage account that allows my cash that sits in a high yield money market account to be the cash collateral for cash covered secured puts. A lot of brokers don't let you do that. They'll let you put money into a high yield money market account, but as soon as you sell a cash secured put, they actually move it out of that and put it into just cash, not earning anything. So broker I use allows you to do that. So I was able to collect some interest. So my yield based on cost, and again, my cost up here is the 140 or 14,900 I allocated to the trade based on the first put I sold was 7%. And so I had 1,046 gain. I had a 1,521 unrealized loss. So my total return for the month is negative $475 roughly. That's a combination of real distributions or real premiums I collected in interest and an unrealized loss. Let's look at what happened with CONY. So this is based on the premise, as I described in video number 1, that if I would have, instead of doing this experiment and allocating $14,900 towards selling puts and then calls later, I had just bought shares with that $14,900 on the 5th of January. At that close, I could have bought 635 shares and change. That means that I would have an unrealized loss of 2,500, just a little bit more, almost 2,550. I would have gotten distributions of $682.82. So that is that 635 shares, 0.12 times 107.51. So a total return of CONY of minus $1,864.02. So again, part of that is real distributions and part of that is an unrealized loss. So what do we take away from this? Well, this month I was able to beat CONY with using the wheel strategy on coin, even though I made some pretty horrific mistakes as I documented in earlier videos. Going into next month, it may be a lot harder because I'll be rolling into next month with an existing underwater position. I had the luxury, from up here on the 5th down to here of selling puts and not taking assignments. So collecting, lots of juicy premiums. And then once I took assignment, the stock was relatively close to the strike or my cost basis, so I could sell some juicy premiums. But now, I got a problem. I'm well underwater because the stock is about $15 change below my strike. And I've got an existing position that I got to deal with. So I guess I have two options. Number one is I can sell strikes or I can sell call options below my cost basis, which is dangerous. Yes, I can roll that contract if the stock really accelerates up in the next week or so, but that costs money to roll because I'd obviously have to go further out duration. I might be able to get a credit, but when you roll, you're buying to close and selling a new contract all at once. So your credit would be a net. Or the other thing I can do is sell at the 135 and probably not collect much of a premium because it's so far away. I could try selling a couple weeks out, but still, I think it's going to be tough to beat CONY this month, meaning the February 2nd month. One of the things I will probably do, and it really depends on the next couple of days how the stock does, is double the amount of capital I have allocated to the trade so I can sell puts and calls. What that would do is more closely mimic CONY's underlying ETF structure because they have, at any given time, they have multiple synthetic positions that they're selling covered calls against. And so if I'm able to sell puts and calls on 2 contracts, that'd be great. Challenge is that that's a lot of money. And I'm a little bit worried having it tied up linked to a company like Coinbase, which, if you watch over the last month or more, it's been highly volatile. So anyways, again, thanks for watching the channel. This is not financial advice. This is financial entertainment. Trade at your own risk. Again, if you really want to learn how to do the wheel strategy, there are some great videos out on YouTube. Put in a comment. Like it if you like the experiment that I'm running. If you have any questions about how I trade, feel free to ask me in the comments. I can give you my feedback. Again, I am not a professional trader, but I do this based on spending 2 to 3 hours a week, and I do it on more positions than just Coinbase. So anyways, thank you very much and have a great evening.